KeyBanc downgrading Microsoft from overweight to sector weight, the note highlighting possible downside risk from AI dependency and over-reliance on OpenAI. Joining me now is the author of that note. That would be Jackson Ader, Managing Director and Equity Research Analyst at KeyBanc Capital Markets. Jackson, it is great to see you. I want to get your take on the broader sector of cloud names, the names you know and cover so well, Jackson. But first, let's dig in to this decision on Microsoft, because you just downgraded that one to sector weight. Most on the street, Jackson, you know this, most of your colleagues, they like this name, they got a buy on it, but you moved to the sidelines. How come?
Yeah, thanks for having me, Josh. Yes, we moved to the sidelines overnight, really, I would say, for three reasons. The first is a little bit of worry about artificial intelligence return on investment, just how much money the company is spending in CapEx related to artificial intelligence. Then our recent conversations around not just cloud demand, but just broader enterprise software demand. We published a survey overnight as well that just frankly had some negative data points pointing to Microsoft and their ability to I'm not calling a quarter, but their ability to make the quarter. And then finally would be, I think the depreciation expense is probably underappreciated by most investors.
You know, when you look at how how much hope there is essentially of a AI investment boom ahead, and obviously Microsoft a big beneficiary of that, how much do you think the policy uncertainty and some of the pullback that we're seeing from a variety of different companies across the spectrum is affecting what's likely to come to fruition over the course of the next 6 or 12 months when it comes to AI spend?
Yeah, it's funny. In the near term, I do expect artificial intelligence to take a little bit of a backseat to the macro headwinds and just the regular uncertainty that's out there. Artificial intelligence could be seen as maybe more of a luxury good in an IT spend or an IT budget stack. And if you're a luxury good when there's uncertainty, that is not necessarily a good thing. Luckily for Microsoft, they have plenty of other businesses, and it's not just about artificial intelligence monetization for something like Copilot. But still, we've picked up in our conversations, in our checks, that AI has faded a little bit into the background in terms of IT budgets as we've gone through the last 3 to 6 months.
And Jackson, Microsoft looks like set to report results on April 30th, so we'll get more insight at that time. You know, the stock, Jackson, it's in the red. In 2025 and over the past 12 months. How did you think about valuation when making this call? I mean, obviously you must not think it looks terribly attractive here.
Yeah, it has been a frustrating stock. I mean, remember, we were overweight until about 24 hours ago, right? So not great by us for the last year. But a lot of the stock has actually outperformed its peers because it's a really nice place to, what I would say is, go and hide during some choppiness in the market and specifically in software. So the stock has actually outperformed most of its large cap peers here in 2025. And so our feeling is that a lot of that flight to safety has probably played out. And so if you are of the mind that software stocks or the NASDAQ is going to take another big leg lower, then Microsoft for the time being is this will be a poorly timed downgrade, and Microsoft probably outperforms during that kind of an environment. But from a valuation perspective, relative to its peers, if you adjust for growth, its PE to growth ratio is either in line or more expensive than a lot of its peers. And I also think, again, I mentioned the depreciation expense being underappreciated by probably by us and by investors. It's possible that those gap earnings are maybe a little bit too high in the next couple of years.
And with seeing that the AI spend maybe cutting back a little bit, where really is the opportunity for growth for Microsoft in the next 6 or 12 months? Let's say on the upside case, where are you going to get some earnings acceleration from what you see?
Yeah. It's a fair question. Where does the upside come from? I think probably two sources. One, absolutely Azure. They're spending a bunch of money. Why are they spending so much money? They're spending so much money because they're trying to meet demand for Azure, both on AI workloads and non-AI workloads. They are capacity constrained, and they are hoping that that capacity comes unlocked in their first half of their fiscal 2026, which is really just the back half of calendar 25 here, starting in June. So Azure, if that capacity is unlocked either sooner, or if the capacity that is kind of held behind those gates ends up being much larger than we or others had appreciated or expected, then that's where the upside is going to come from a revenue perspective. The other one would be, I mentioned Copilot or agents, just the applications, the usage of AI from applications, being able to drive their productivity suite in Office 365 commercial higher than what we or other analysts expect from that revenue line item.
So Jackson, you got the equivalent of a hold on Microsoft. Let's talk about a name where you see opportunity. You still like Oracle. That one is a buy, you tell clients, Jackson. How come?
Yeah, we see a more clear path to overall company revenue acceleration from Oracle. But yeah, I mean, it's in a very similar story. They're spending a ton of money on artificial intelligence CapEx. That is also going to hit their depreciation expense. We just feel that Oracle is a little bit more of has a little bit more of a growth preference for it in its investor base relative to Microsoft, which is in a tough spot with AI, where you get these investors that say, hey, are you sure you're spending the correct amount of money on AI CapEx? And they're trying to signal flexibility, whereas from Oracle, we don't hear that same kind of pushback. At Oracle, it is really all about OCI, Oracle Cloud Infrastructure revenue accelerating through the rest of 2025 and into 2026.